All right, well, as we mentioned, we've got a mixed story for stocks in North America. While the TSX and the S&P are down, the NASDAQ is up by 0.3%. A lot of that has to do with the story of Tesla and a strong showing for that stock this morning. Kim Forrest is the founder and chief investment officer at Bokeh Capital Partners. She joins us with her take on the markets. Kim, nice to see you. Let's start with that Tesla story. What was your reaction?
So I think the actual results were better than feared. We knew this was going to be kind of a down quarter for the company for lots of reasons. But Elon Musk is able to have this sort of, I wouldn't say it's truth suspension, but it's more like pointing the investors that like him towards the future, and to talk about that, about what their desires are and where they're moving, as opposed to what happened in the quarter. And I guess that it is the very best that a CEO can do, is because once you've reported what happened in the quarter, it's almost immaterial. You want to know where they're going, how they're going to get there, and what that looks like from a shareholder's perspective. And I think pointing the people towards the future, it's a lot further in the future than most CEOs talk about, but with the whole autonomous taxi fleet and autonomous driving, which, to be fair, the company has been really focused on delivering that product, the autonomous driving product.
It's obviously, as we were saying earlier in the program, it is interesting, unique to be sort of talking in 10-year milestones per se, but also maybe a bit of a distraction from what was a pretty challenged quarter. Now, it has been a more challenging stretch for tech. It was the big winner, but if you start looking at how the money's been moving within the stock market, investors it has felt like they've been willing to give up some of those gains, maybe take some profits in tech after the recent run-up. How do you feel about the money flows in the stock market of late?
I think they're rational. Well, most are rational. Let's talk about AI for a moment. That is the thing that has been like a magnet to pretty much every new dollar that goes into technology. And I think that's misplaced. While it's exciting and we got a glimpse of what it can do in 2023, and we're about at the anniversary where the OpenAI product, ChatGPT, came to the eyes and minds of consumers, and more importantly, investors, and it showed the promise of what AI can do. Now, I was a software engineer developing AI systems in the 90s, that's 1990s, and we had challenges because computing power was expensive and the data wasn't there for the models. We've sort of solved that, but it shouldn't be the only focus for an investor. There is a lot going on out there. And to only blindly look at the ChatGPT sort of model of any kind of computing, I don't believe that's sustainable in the short term, because these models take a very long time to deliver. And deliver they will, but it's going to take longer time than most investors have an attention span for. Yeah.
Well, listen, technology, obviously, to your point, things evolve, things change. If I think back to the 90s, I think that might have been one of the star moments for a company like Intel, which has been going through quite a big change, a big transformation, new leadership there. But when you're looking for opportunities as an investor, this is a business that catches your eye. How come?
Well, as you said, it's changing, but it also is changing with a nod to history. The company has been able to deliver great products, and it certainly benefited from the move into data centers. And while we can all kind of beat Intel up for having missed the move to mobile and handheld devices, I don't believe that it is going to miss the move to supply AI data center kind of products, and maybe even end products that attach or use some sort of AI at the node, if you will. Sorry to get all computer sciencey there on you, but at the end point where people are using the products. So that's why we really like them, plus their foundry model. I think that's really smart. One of their core capabilities has been building chips with high yield. So that means a lot of profitability. Now they kind of dropped back in their technology. They let Taiwan Semiconductor win in making the highest end chips, but they see their errors and they're really focused on making up ground, and I think they are. So that's why we are really interested in Intel.
All right, and it's worth pointing out, we mentioned actually just yesterday that when you look at 5-year earnings growth expectations on Wall Street, Intel's growth is spectacular versus some of the other technology companies. Mind you, that is always true if you're coming off a rough patch or a lower base, but that is something that people care about, which is profit potential. Now, another name not tied to the chip world, but tied to the retail world, Urban Outfitters, which I've always found to be a very interesting company. And it was, started as a student project, and even the store strategy for this company, the little maze they create within their locations is a fascinating case study. But Urban Outfitters, here's a retailer navigating through a very fickle retail world. What is it you like about that company?
Well, retail is always fickle. That is at the heart of the consumer. We like things and then we get bored with them. And why I like a lot of the companies I like, and it could be a train part manufacturer or it could be Urban Outfitters, is that they have internally processes that allow them to continually develop products and services that delight their clients. And I think Urban really stands out. They've been around since the 70s as a jeans seller, but they've really broadened out. They know who their consumer is. They're not chasing after every consumer. They want that fashionista kind of boho middle-aged and younger and middle-aged woman that can spend money. And my goodness, are they able to understand what she wants to wear next over and over again. And that's what I always look for in a company, is sort of a perpetual motion machine, or at least a perpetual money-making machine.